Hey, Sad Nation, what's going on? Good evening to you all. It is about 12:30 midnight U.S. Eastern Time right now, making this video for you. Hopefully, that you will find it useful and advantageous to you. Again, this is for educational purposes, not financial advice. Let's get into it. What you're seeing on your screen right now is SPY and the daily time frame, right? So we'll go over a couple of things very quickly and whatnot. Um, what you see in this middle here is the EMA clouds, right? This green and blue and orange and red. That's the EMA clouds, right? The 8, 9, 21, and 34 EMA. And then what you see in terms of this yellow line and blue line, that is the 50 and 200-day moving average. What I want you to take a note of right now, looking on the bigger picture on SPY, is this pattern, right? I pointed this out many times already on my Twitter account, Stocks After Dark. Give it a follow if you haven't. Is that we have potentially this inverse head and shoulders, right? Here's the shoulders, here's the head, and then here's potentially forming a shoulder, right? Here is our neckline. This is our neckline right here, which is the liquidity zone, right? This is where we have the imbalances, we have the order blocks, we have resting orders waiting, right? So we tapped it last January in January 2022. We hit it again in March, and then we just hit it again this last July, which a week ago, right? Hit that, and you can see what happened when we hit that, right? We hit that, and then we rejected and came down, right? So that kind of is playing out in terms of that pattern. Um, we also say this is a cup and handle around the bottom, depending on how you want to look at it, right? So that is that pattern there. Um, what also matches up with this is the fact that we have this rising wedge, right? So inverse head and shoulders. If we are doing forming the final shoulders, we're coming down, right? That is in alignment with this rising wedge that you've seen, right? So we pretty much started forming this rising wedge from what Monday, April, like April, early April, until now. So we are expecting a move to the downside, which we broke out. I do want to point out that if we are breaking, we are potentially going to break somewhere like this, right? This is called the anticipated move, right? We are expecting maybe down to the monthly lows, which is around 435. I know that's crazy, right? Again, that doesn't mean that it's going to happen this week. Next week, it could take a couple weeks for it to happen. And it may not happen, right? It does not necessarily mean that it means do the whole movement. I did want to point out, saying we are looking at this anticipated move, we're looking at maybe the 50% mark, which would be at 444.35 or 444 and some change, which would pretty much align with the 34 MA on the daily time frame, right about here, right? So that is kind of what I'm looking at. We'll have this video recording, see if we're accurate or not, but something to keep a note of. So now we're looking at the daily time frame. Ignore this blue line. This blue line will be of significance going into a little bit later on when we get in detail. So I had pointed this out to you yesterday for those that follow my Twitter account, saying, look, on ES last night we were breaking out of this. We broke out. Today which caused SPY to gap down. Now we have this gap to the upside, which is starting from 453.52 to 455.49. In fact, I'll probably just put that on there so that we can visually see that. Right? We have another gap on the downside, right? Pretty much from 442.97, which is essentially 443, to 444.91, which is 445, right? So we got two gaps that we're sandwiched in between, and you can see that this gap pretty much is right at the bottom of the EMA class, which is 34 EMA. So, look, most important thing is SPY today close right at the 21 EMA, right? On live space earlier today, I had pointed that out. I said, look, SPY is going to make this move down. It's going to sweep the lows, and to watch out for that 450, which was aligned up with this 21 EMA. We broke it obviously, but then we came back up and rejected and closed above it. So that is why that's important. That's why I marked it off the 21 EMA here, and I got the 34 EMA. So this is a very important concept in my opinion, especially because it's part of my trading system. If you don't use the EMA lines or EMA clouds, then you can discard it. But to me, it has relevance. Just a 21 EMA is usually a pivotal point. Depending on which way we go, is where we're going to continue to shift. The fact that we closed above it means that we are going to stay above it for the time being. Once we break it, if we break down below it, then I would be expecting us to test this lower 445. Keep in mind, tomorrow we do have two earnings, right? We have Amazon or I think it's Apple and Amazon, or one of the two. We have two of them, right? Which are going to be market movers because they are part of the S&P 500, and it does impact the movement. So, again, high level recap. You saw the fact that we had an inverse head and shoulders on a larger time frame, meaning that we're going back from January 2022 till now. We rejected off this neckline, this liquidity zone up here. We also have this rising wedge, which we broke out of, right? So we continue down today. Tomorrow, we'll see whether we pull back up and retest this trend line and possibly this gap. If we do, that's what we're looking for, and we gain acceptance to it. If we don't, we could possibly continue down a little bit more, and then before we come back up and retest it. What you need to understand is that having a pattern play out like this is no different than when you're trading intraday, right? When we're trading intraday, we're looking for a breakout, pull back, retest, and then continuation on a failed retest, right? So that usually takes, if we're playing on a 5-minute, that could take maybe 3 to 5 candles. So, right, that can take 15 to 25 minutes to play out. So if we're looking at on a daily time frame, we will be expecting maybe a couple of days worth of it for it to play out, meaning that tomorrow can come down, on Monday it can pull back up, Tuesday pull back up, and then Wednesday of next week it might test this area and then fail, come back down, and then Thursday, Friday, and then the following subsequent week after next week we might come back down, right? So just keep that in mind, right? I think a lot of you are still trying to comprehend that in terms of a daily time frame, right? A lot of you are used to the smaller time frames because you are day traders. So again, the fact that we broke out, we are expecting, and for the next few trading days, a pullback and then retest and come back down, unless we just have a straight continuation down. But right now, with the way that the market is, we will just kind of wait to see what futures does and then play that way. So this is SPY on the daily time frame. You can mark these levels off, right? No difference. The monthly, the weekly has not changed. If you saw that before, they are the same because we are still in the same month, same week. The things that changed was the daily highs and lows and 50%. So, you can pause the screen and grab the numbers. I could do that so you can see it. So you can grab the numbers there. All right, cool. Anyway, let's drill down to the 15-minute now, right? So that way you can see a little bit more clear what we have on the 15 minutes, right? So on the 15 minutes, we do have potentially a head and shoulders, right? Here's your shoulders, here's your head, potentially come back, form this final shoulder, and then come back down and form the break. So just something to keep in mind of. We're always looking at data from different perspectives and see what it shows us, right? Even tonight when I go to futures, just show you. Or, we can look at this and say that we actually have, somewhat of a falling wedge, right? We can do this, right? So eventually, if tonight's futures breaks up, we'll go up, but we could expect maybe a down, and then eventually come back up, test this. This is the gap, fail to get past the gap, and then come back down. Right, just something to look at. The other thing I want to point out is now we go to these blue lines, right? What you're seeing in these blue lines is 8:30. That should be 8:30. Let's see. Tomorrow. That's weird. Sorry, apologize about that. This should be at 8:30. This is going to be at 9:45, and this will be at 10 a.m. And what these are going to be the econ data events that are coming out tomorrow morning, right? So that's why I say it's very important. As many of you are starting to follow me on Twitter, you will start to realize how econ data impacts the price. Especially sometimes as new traders, you might be like, "Oh, why did all of a sudden price do this crazy spike? What hit the market? What caused it?" Well, it's econ data, right? And that's why I say it's always important to mark off your chart so that when we are approaching this time frame, you're gonna see volatility pick up, and then all of a sudden, within a minute or two of the data actually coming out, you're gonna see all these spikes. And once data comes out, it will spike. You don't want to be caught off guard because you know what? Sometimes if you have stops in, you'll get triggered out. So I want you all to mark those times off, right? 8:30, 9:45, and 10. And that is based off of what we see here, right? So tomorrow we know that we have jobless claims at 8:30. Then we have the PMI at 9:45, and then we got the ISM PMI along with factories orders month over month at 10 a.m. And then you can see Friday we have some more. But purely focusing on Thursday, we have this. Something else to note at 7 a.m. We have Britain giving us their interest rate decisions along with their minutes and monetary policy, right? I didn't put this on the charts because most of you are regular option traders, right? This will have some impact on futures, but honestly, I'll probably still be asleep. So it won't really matter for me anyway. Could you take a move here? Sure. But for the sake of generality and for everybody, we will just keep it to regular trading hours, 8:30, 9:45, and 10 a.m. The reason why we're looking at 8:30 is because this jobless claims data will impact the directional movement of the market tomorrow. So we will see, right? They're thinking, jobs will come in at 225,000, and we'll see if it comes in higher. It's going to be bad. If it comes in less, it will be good. So that is what this is, right? So again, on a bigger time frame, you saw what SPY did. It broke out of the wedge. On the smaller time frame, we have this potential head and shoulders, right? I showed you that already. So that means this is the neckline. Then we're looking for a potential break to the upside, which would align with this falling wedge, right? So we'd be looking for a move up past the daily and 50%, which is also very close to the week low. Maybe test the day's high. We might not get that far. And then possibly reject and start the leg down into Friday. The other thing to look at is tonight in futures is that futures live right now, right? So, and it's pretty much flat, right? We opened up, we came up, we came back down, right? So we do have potential, maybe a potential head and shoulders on futures, right? Here's your shoulders, here's your head, here's your other shoulder potentially forming, and then maybe come back up, right? So just something to keep in your mind. And we could draw the same pattern out on futures as well that we did on SPY earlier, right? So we can say, well, potentially this could be our falling wedge, right? And this is just to give us a visual, right? We don't necessarily, sometimes in charting, if you dry trawl it to the line, exactly, you'll find that will skew your perception of things and vision, because you're trying to get too exact, and it doesn't always work out that way. So again, right, we have this inverse head and shoulders, we have this falling wedge. ES is no different than SPY, meaning that we did break out of the rising wedge on bigger picture, massive, massive movement, right? So, we'll see whether we pull back, right? We had a massive two down day. Right now it's consolidation. Um, we can see whether we're going to pull back up. Highly get doubt we're going to make a two up day, right? Two up day on ES is huge, right? We would have to hit 45, 93 again. Most likely going to be somewhere between the daily and weekly 50%, and then from there consolidate and then make another leg down. The other thing I want to point out is the quad chart, right? Where is it? Yeah, here's the quad chart. So the quad chart, what is the quad chart, right? The quad chart, if you're new to me, it is gonna be Apple, Microsoft, Google, and Amazon, right? And the reason I include these in my analysis is because the S&P 500 is made up of these, right? These are part of the S&P 500, so whatever their movements happen, it impacts SPY and triple Qs. In fact, I will show you something. This is something I created and for the community a long time ago, and this is part of my pinned tweets on my Twitter profile. So on your screen, you see this, right? QQQ and SPY. And you can see what are the big top equities that make it up, right? So you can see Apple is the most heavy weighted in both of them, 12%, 7% for QQ and SPY, 10% for Microsoft, about 6% for SPY, Amazon's 6%, 3%, Tesla's on QQ, Google's is about 2%. So you can see that just Microsoft, Apple, Microsoft, Amazon, Google alone is already about 15 to 16% of SPY, right? So what they do will impact it, right? It's very important, and you will start to see more and more of this as you start to follow me and understand how I look at things, right? We don't purely just focus on SPY and see what it's doing. Like, there's a lot of things that impact it. So the thing about Amazon is that, look, we did close below the May clouds. We did bounce off this 50-day moving average. We do have a gap to the upside, right? So we're looking for potentially, today was 2 down day, right? But we had a hammer. Even though it was a bearish hammer. We're expecting a potentially a 2 up day reversal tomorrow on SPY, on Amazon, as long as it can get above the 34 EMA and then potentially take out the high. So we do have this gap here, right? Gap here. And again, we have the same regular patterns, right? Here's, potentially a cup and a handle come up. So if Amazon does go up, then, pull SPY up. Let's look at Apple real quick. Apple, ooh, a lot of lines here. So Apple today was another 2 down day as well. And you can see that it made a solid 2 down day, but it rejected off the 21, right? 21 EMA came down, tapped it, and then came back up. Again, we are expecting a potential 2 up reversal on Apple as well, right? If that's the case, then that would impact SPY and QQQ. So let's go to Microsoft now. Microsoft is, I think, from what I saw earlier, the unique one. If I can spell it. All right, so here's Microsoft, right? Microsoft has been pretty nasty, just in terms of the chart, right? We have a gap to the downside, and then we do have a potential 2 up. Again, the reason I say that is because, look, we are extending over the clouds. That is the only reason why I'd be looking at that, is because we closed below the clouds, but we are overextended, and we did hit these lows, these imbalances, this order block. So we're looking for a potential 2 up on Microsoft as well. So for Google is it's a little bit different as well. Like, we have this huge gap, right? And obviously it's due to earnings, right? Google's just a massive rocket. So you have this almost $4 gap on Google to the downside, and we also have a gap to the upside. right? So it's wedged between these two gaps, and it is sitting right on the 8 and 9 EMA. Maybe, I mean, it's a little bit below it, so we can say maybe this is the 10, 11, or 12 EMA, right? So again, for Google, we are gonna hit one of these gaps tomorrow, right? So it's a matter of which magnets get pulled. Um, right now, based on this, this is a spinning top, so we might be looking at a spinning top and potentially go back up, test this gap top side, reject, and come back down. Um, it honestly looks like a reversal tomorrow or a consolidation. We could get some kind of movement to the downside, but we will know during London's trading session. So, based on looking at the quad, looking at SPY, and the patterns and whatnot, I would assume that we are going to try at least for tonight, between tonight and our regular New York session, that we're going to make a move up and then potentially reject somewhere and then come back down. So that is what I am seeing going into tomorrow. Just remember, like I said, look at technical analysis, look at these patterns, look at what you see, right? We have the patterns here. This was a 2 down day. I know it's hard to see because of all the stuff going on, but it is a pretty decent size candle, right? It is a little bit of swing top, because we're tail and tail, but I would not say it's an indecision on that. We can even look at the weekly, right? Weekly, massive week, right? 2 down week. We're still overextended on the weekly, and then same thing with the monthly, right? The monthly is actually inside month, and we're overextended, right? The clouds are down 430. Eventually, they always pulls back, right? That's just how it works, right? If you go back here, overextended, pulls back, right? But there's a monthly time frame, so that means it would take a month or two for it to play out that way. But anyway, hopefully that helped you all out. If you have any comments, let me know. Leave them below and we'll address them. Again, thank you for taking your time. But this is the market outlook for tomorrow. Enjoy. Have a good evening. I'll talk to you later. Bye.